Bottom line results here. Netflix beating on both the top and bottom with adjusted earnings per share of $5.40. That's versus expectations of $5.12. Revenues of $10.13 billion, also ahead of estimates. Versus estimates of $9.77 billion. The company having net additions of 5.0. Sorry, I just have an adjusted number here on revenues. Netflix revenues of $9.83 billion. Coming ahead of estimates of $9.77 billion. And the latest in terms of that subscriber number, because subscribers are always so key here. The company reporting 5.07 million net additions versus the 4.54 million, which was the estimate. Now, Netflix is going to stop reporting subscriber additions as of next year. This is the second to last quarter when they will be reporting, and that sub number coming in ahead of expectations. The stock's only up about 1%, but I'm going to be digging through the report, and we'll be back with more.
All right,
John?
Yeah, we're looking forward to that, Julia. We'll see you in just a few moments. So, Barb, I'm going to go back to you as a Netflix shareholder. Stock's up 48% so far this year. Been some chatter about valuation coming into this report. We got a top line and a bottom line beat, and subs coming in better than expected. Your initial thought?
Yeah, because I think the expectations are clearly very high going into this quarter. And I think the subscriber growth was for this quarter a wide range between 4 and 9. So this is a little bit towards the higher end of the low. But I think what we want to hear, or what I want to hear, is about the ad growth, because they've really been much slower to ramp. They've just recently started investing in technology to improve their data collection and their targeting. And so they've only right now on a run rate for $1 billion. So they're really lagging there, but there's so much potential. Out of 190 countries they're in, only 12 have the ad tier. So this ad tier will be big once they sort it out internally. And that's going to be the question on the earnings call. What kind of a lag? Because the password sharing, I think, will continue to add subscribers, but not as much as they saw initially. So there could be a bit of a pause, but long term, we know they're the clear winner. The scale, the content that they have, the ability to increase their cash flow and their margins is unparalleled in this area, in the streaming industry.
Okay. Mark Mahaney, you've got an outperform and a $750 price target on Netflix. Your take on the initial numbers and what you want to dig further into?
Well, I think this is kind of a push quarter. They needed to put up upside. They did. That was expected. There were whispers they were going to do more like 6 million, whatever. It's slightly better, but the growth is slowing down in terms of the net ads. I think the guidance is really important. And then there's another issue that the market's waiting for, which is a price increase. This is a company that historically has been able to effectively raise price, or at least tier it, offer higher price point plans for those who want something extra. I think their value proposition is so strong for Netflix, especially relative to other offerings out there. And look at the content slate that's coming in Q4. So I would expect them to talk about the timing for a price increase on the call. I think that'll move the stock one way or the other. But look, I continue to like it. It's not one of my top picks. Valuation is good. It's interesting. It's not compelling. I still think there's reasonable upside to 750, and there's a more bullish case to be made than that. But these numbers here are fine. They're solid. It's kind of a push quarter for me.